just seem to be so many of these Africa investment conferences currently underway. Now, some would say, yes, it's a great growth story in Africa. It's the new untapped frontier.
Right.
Beside the talk, how much of the investment's actually flowing?
Africa definitely is a destination. I think, in emerging markets there are not too many locations you can go to.
Yeah.
And I think Africa, with the returns and all the good fundamentals that we see, is where investors are looking at. So yes, with all the talk, I think we've gotten to the point in the growth curve where products are being created for these capitals to sort of flow through.
Mm-hmm. Okay, so products being created for those who don't want to do FDI because they don't want the risks of putting their capital physically in Africa.
Okay.
How do they access this market when they get into local bourses?
Well, the beauty is, if you go into local bourses, the first thing is regulated. Secondly, it's transparent. Thirdly, you have access. It can be accessed globally. So if you're sitting in London, if you're sitting in New York, you can trade into these bourses with the right kind of partners. So these products are definitely the alternative. They're definitely the sort of answer and the solution to creating liquidity in the markets.
Let's talk about that liquidity, because some would argue that not many markets are liquid, that there's too many stock exchanges in Africa, not enough local companies are listed, and that we need to do a lot about developing capital markets.
Well, there are many exchanges. I think it's a growth curve. I think it takes time. I think these exchanges are young. And I think, as young exchanges, it will take a time for them to build, to develop their platform and the products that they offer. Now, we believe that Africa is a growth story. The exchanges are actually lucky. They don't have any legacy issues in terms of products. So a lot of what they're doing is focusing on the products. Now, as an investment destination, again, and providing liquidity, what we can see is that, there are pools of capital prepared to sort of go into certain exchanges that do the right things in terms of framework and in terms of actually getting the rules and regulations together.
Let's talk about those products, because I know that with Africa being rich in resources, exchange-traded funds seem to be the way to go. We're seeing a lot of them for commodities like gold, silver, platinum in Africa. Where else?
I think obviously resources, as you mentioned, gold, sort of other minerals. Resources is a story for Africa. I think it's and going back to your last question as well, it's about sort of about time that Africa starts sort of being able to sort of building the continent through its access to these resources. Now, other routes, consumer staples are definitely where to go. Financials, definitely. As you talked about in terms of the FDI, well, a lot of groups out there are looking to sort of replicate the small success they've had with PE and FDIs in the capital markets and the financial sector.
What about buying into the actual resource companies? Because what we've seen is many, particularly in the oil sector, many of them are choosing to list in London on AIM, whatever the case may be, because there's just a sense that the market just isn't mature enough. Sophisticated, I think, is the word that's being used.
That's correct. That's correct. I think also, apart from it being not sophisticated, I think the main thing is who are the investors? Where the liquidity pools? Where's the cash going to come from? And as much as we'd like to sort of get these companies listed in South Africa or Nigeria, the investors aren't in Nigeria. However, the strategy is, if you get these products that are Africa focused, you can then dual list them back into any exchange in Africa, and that becomes a win-win.
What about local listings? Because that's also another challenge, is that we're not seeing local African indigenous companies using stock exchanges as a route to raise their profile or their capital.
Yes, I think this is where the regulators sort of need to sort of work very closely with their local brokers and with the local investors. It's all about education here, and one of the things that we're focused on is making sure that we get that knowledge across, so that local institutions can actually sort of do that locally and generate that. But the key thing is actually getting the capital out of these developed markets and bringing them back into Africa, so that the sort of the flow increases within the continent.
There's also a big challenge to raise secondary markets, particularly because what we are seeing right now is competition, for lack of a better word, between companies and the government targeting the same investor for their debt.
Yes, that's a difficult one. I think you know, I think yes. I mean, there are not too many locations. I mean, there are not too many places to go. However, I mean, we all know that exchanges are very nationalistic in terms of how they portray themselves, and which is the issue in terms of getting exchanges to work together and come together. And you know, that hasn't happened yet in Africa. But I do think that we have to sort of start looking beyond that and sort of start looking to a different breed of investor who sees Africa not just as a pure as an investment destination, but as a hedging opportunity to diversify their portfolio.
Liquidity, that's the catchphrase also when we're talking about African markets, and that many of them are illiquid. You just don't have enough money flowing, don't have shares with a large enough pool.
Yes, and that is a problem. I think it's a chicken and egg situation here, because when you look at these countries, some have 30 companies and even less, and some have 200 companies and just 40 that are liquid. But the beauty of an ETF also, and sort of these alternative investments, is that they can sort of speed up the liquidity within the local markets, because it gets brokers trading, it gets fees lower, and cost of execution gets down.
Besides these sort of the administrative benefits of going the ETF route, just give us a sense of returns that you're getting if you're investing in ETFs. Because for instance, when the gold price was really high, we were told that gold ETFs would give you close on to 13% returns, specifically in new markets like Mumbai, for instance.
Yes.
What's the case in Africa?
Africa, you probably get higher. I think in Africa, depending on the benchmark and depending on what time you step into the market, you know, you can get close to 15%. Now it's the whole question of beta versus alpha. You know, do you want skill, or do you just want something that actually just gives you returns, risk premium, which is your beta. Now, if you're looking for alpha, then you know, risk and return. I think Africa should sell itself more on risk premium and sort of being safe and consistent.
I mean, we're always cautioned not to look at Africa as one homogenous block, and that we should look at markets regionally, sectorally. We know that energy is the next sort of growth area in Africa. So the hotspots are the oil producing countries like Nigeria and Angola, for instance. But for those looking to walk off the beaten track,
off the beaten track, I think in terms of asset class, well, industrials works. I think industrials, and then I think industrials and manufacturing. I think that's the way to go. And then if you're sort of stepping out of that, then private equity is still, you have to do your homework for that. But if it's private equity is an active sort of approach, and if we look at our sort of approach of funds and trading into the exchanges, that's more of a passive way to get into Africa.